Hello, everyone. Thanks for joining today. I'm going to be recording this talk because we will use it in other capacities later. The goal for today is to review what used to be called the Paradigm Trading System. It's now part of the Pathway to Prosperity training program, but essentially it outlines the rules for moving through levels. Level 1, 2, 3, and 4. And there are people that are level 3 traders that never really gotten past level 3 that are professional traders or that make a substantial living trading at level 3. I'm going to use the stock market example as the basic because most people that are super active day traders are stock traders, while there are a number of there's a growing number of people that are doing Forex and crypto and of course futures. And I'm a futures trader as well. We'll talk about how that might be applied, but just so that we can create consistency across it, I'm going to focus primarily on the application as you might see it for stock. So I'm going to get started there and by sharing this other page. There we go. So this is provided through the Trade Oracle group. This is, again, as we said, kind of the Pathway to Pro. We call it the Pathway to Prosperity training program. But it's a plan designed primarily, number one, is to help people prevent losing a lot of money so that they can stay in the game long enough that they become consistent, that they build the skills. And part of that is art, part of that is science. But the goal is to stay in it long enough that you develop a feel for it. And then these rules snap to when they're needed so that you know when to step up and increase your trading size, when you need to get small. And there are a number of things that are involved in that, and we kind of add new pieces of the puzzle at each level. So that's part of what we're going to talk about today. So the trading plan consists of 4 levels. A new trader, or any trader for that matter. We used to have people come into our floor that had worked for Merrill and Morgan and Goldman and others for a long time. And they said, well, I want to come trade. And just because you've been a broker doesn't mean you're a trader. Just because you've traded on an institutional floor doesn't mean you're a trader. If you're trading order flow, meaning that people have sent you orders, I'm a buyer of IDPH, I'm a seller of Tesla. You're going and finding a market and making the spread, but you have a pressure behind you that's driving you in a single direction. Your goal is to get that done efficiently. So you work somewhat on efficiency, but if you're not terribly efficient, the only person that suffers is the person you bought for. If you do it really efficiently, then your firm that you trade for does better. But when you have order flow behind you, it still is a different game. So this is for people that are trading their own money, and they're trying to go from a place of trading, whether it's for fun or for income, going to a place where they're trading for dependable income, and perhaps to a place where they're replacing their present position. So this is something that we probably should do on a quarterly basis, but I wanted to have something in the books that walk through the Pathway to Pro, what we used to call, again, the Paradigm System, and so that it's a reference video. And I'm going to try not to take forever and ever. As you guys know, I like going into detail about things. I'm one of those that's a visual person. It takes me a while sometimes to understand things. I'm not the fastest learner, but typically once I get it, I get it. So I'm slow to go. It's kind of like running. I've never been the fastest runner. I used to be able to run for a long distance, but I wouldn't win any races. I could stay upright, but wouldn't win any races. That's kind of what it takes, though, to become a good trader, is as long as you can stay up and keep from losing a lot of money, you'll eventually find your profits getting larger and larger. And soon enough, you can be a professional trader. So I do believe that it's a skill set that anybody can learn. It's whether they have the passion to do it and the principles to follow, and then the motivation to stay with those standards to get to the place that they want. And some people get tired of it. They get impatient. There's a number of reasons for it. Some people just don't have the discipline or what have you. But the rule to begin with. So one of the rules that I would say, if you want to write, if you are taking notes, is trade smaller than you would like. Be overly comfortable. Treat it almost like a computer game. And if you get in the habit of treating it like a computer game to begin with, then when you're up $30, it won't matter that much. And when you're down $30, it won't matter that much. And then once you get to following the trade and not following your P&L, you'll get used to trading off of the chart. So rule number one is trade smaller than you're comfortable with. Number two is get in the habit of trading the chart. Don't trade your P&L. Trade the chart. If you need to trade quickly and things are moving, shorten it up and take smaller profits and just keep throwing that money in the till. But don't try to trade to get to $100. If $80 is the target, make $80. Also don't trade to make $100. Oh my gosh, I made $100. I'm closing my trade out when the opportunity is $400. Stay in the trade. If the math and the patterns tell you where to go and you stick with it, you'll find that the more you do that, the more confidence you get in your skill set for reading that pattern. And trading and reading charts, I analogize because of my time in medicine, I analogize it to reading an x-ray. Someone else walks up to look at an x-ray and they go, what the heck is that? It looks like somebody's chest. For somebody who doesn't know how to read an x-ray, it does look like somebody's chest, and it may be their chest. But how do you diagnose pulmonary embolism? How do you diagnose cancer? How do you diagnose other things? It's understanding how to read an x-ray. And you get people that can see the basics in an x-ray, but they're not pros. And the more they do it, the more they learn, the more expertise they gain. Same thing in trading. You're going to learn the basics and you'll see it. But as you do it more and more, you'll see patterns that are in small time frames and medium time frames and longer time frames. You'll see them working together. And we're going to talk about that as we walk through these levels. So number one is what? Trade smaller than you feel comfortable with so that you're not trading your P&L. That'll help you not trade your P&L. Number two is to purposely, directly focus on trading the chart. Get in the habit of trading the chart. The third thing is, and you'll see this in every one of these, don't trade if you're not prepared. And so trading to me combines not just technical analysis, but fundamental analysis. So you need to understand where the markets are going, what the key influences are of the things that you're trading before you even set foot into the market trading. And if you decide to trade against that trend, it should also direct you to trade smaller, right? So knowing fundamentals of the market helps you to determine how you trade when you do trade. So let's start off with the actual levels, and you'll see these ideas come up again and again as we walk through. So level one, if we're looking at this from a stock perspective, you're going to trade a maximum single trade number of 100 shares. So that means that if you're starting with a small account, you probably shouldn't trade Tesla, right? You don't need to trade things that are $1,800 or $800 and you have to trade $80,000 worth to trade 100 shares. Don't do that, right? Single trade shares that are $100. I typically recommend people are trading stocks between $15 and $50. Those are the ones that have enough movement that you can get some decent trading in and actually work to find, 5 or 10 to watch that have nice, smooth movement. They don't jump up and then trickle for the rest of the day. They don't gap here and there and then trickle the rest of the day. Find things that have nice movement throughout the day, that have nice patterns and flow. And over the course of several 5-minute bars or 15-minute bars, you're comfortable sitting in that for 3, 5, 7 bars at a time. If you're right, you're willing to hold it for a couple of bars. Or if you're wrong, you're willing to hold it for a couple of bars. And if you're right, you're willing to hold it for 5 or 7 bars. If you can trade that comfortably in that space, that's where you should be trading. Don't let other people pull you into other things. Even in the futures markets, it works the same way. The way that gold and silver trade is not the way that heating oil trades. It's not the way soybeans trade, right? Some are just exponentially more volatile, even with sometimes the same amount of money or thereabouts. Some may have $3,500 is the price is the amount of money it takes on margin. Another one's $5,500, but the one that's $5,500 may be 3 times more volatile. Once you become a really good trader, you can step into that to use less money and get more performance, more potential, right? More energy is generated that you can profit from. But to start with, trade smaller. When in doubt, trade smaller. And so level one is focused on getting you in the habit of finding good trades. So it helps you to figure out what stocks you should be trading or which futures or which Forex pairs or what have you. But the second goal of trading 100 shares is to find those with patterns, right? So it's not just, it's finding the price range that's good, the stocks that fit in that price range, the ones that have patterns that you like. Many people, I would say half of the people that are traders, will find that they prefer trading one side of the market or one pattern set. They like trading breakouts. They like trading off of the trend lines. They like trading reversion to the mean, to the trend line. And so you're going to find as you go through this, ways that you like to trade what you see. So look at things that you like the way they look. They trade in a range that's comfortable, and the stock price gives you the kind of comfort in holding it for 2 or 3 bars when you're wrong, that you're okay with that, to sit in it so that you can start building patience, because you're not going to try to pick the tops and pick the bottoms. The goal is to learn to pick the top quarter and the bottom quarter, to take the meat out of the trade. The minimum number of trades that we really want, if you're a day trader, if you're looking to do this as a job, is 5 round turns, 10 in, 10 out, right? So it's 5 in, 5 out, 10 total transactions, right? So you buy 100, sell 100, that's one transaction, but that's 200 shares, right? So 1,000 would be buy 500, sell 500. So you're looking at around 5 trades a day, kind of minimum if you're a day trader. And so it means to start early. If you're a new trader, don't trade the first 2 or 3 minutes of the market, let it move, get some movement on it, and then get the flow of where things are going, and then see how the level 1 actually compares to our technology, which is flow. And if you have any other tools or things that you're using, then that's great as well. Your goal in trading this way, and whether it's a $15 stock or a $50 stock, it kind of doesn't matter. The goal for level 1 is to have a gross profit of more than $100 a day. So if you have 5 trades, what is that? $20 a trade, right? I made 20, made 20, if you won all the trades. You're not going to do 5 out of 5 every day, or 7 out of 7, or whatever the case may be, or 10 out of 10. You are likely going to have losing trades. And one of the things you're going to learn between level 1 and level 2 is that you can actually make a living being 40% correct. So we want you to concentrate on getting trades that are $30 per trade or better. Then if you're doing 5 trades, you made 150. If you had 4, you made 120, but you had another trade, you lost 20. Now you're at $100, right? So you're going to find that your average winner should be higher than $20 or $30, and your goal is to be greater than 30. And your losers are going to be smaller. But right now, what we want to do is we want to get in the habit of picking the right stock and finding basic patterns or strategies that we can use, and get in the habit of being right. And ironically, that's one of the greatest challenges there is to be right. So as I said, as you get better and better at trading, you can actually be right less. That's a little counterintuitive. You can be right less often, because you can build into a trade when you're wrong. You can hold winners for longer periods, and you'll have bigger winners, maybe 5 times the size of your losers. You make $500, but when you lose 50 or 80 or 100. You don't need many winning trades when you're 5 or 8 times your average loser with your winners. But if you happen to be able to pick good stocks and follow patterns, you'll move through the pathway. You'll move from level 1 to 2 to 3 faster. So a new trader should make trades only in 100 share lots. So don't add to it. Don't buy 100 and say, well, I'm doing another 100 of the same one and I haven't sold it yet. So I bought 100 and then I bought 100, and now you have 300 and you sell it and you go, well, that's 3 trades. Not correct. That's 1 trade. So you buy 100, you sell it. If you didn't like it, get out of it, buy it again. When it bounces up, sell it. You buy it, you're wrong, and it goes past your stop, get out of it, get back in again lower. But get in the habit of defining your losses and sticking to that. Being able to get out of trades when you're wrong is probably the single greatest skill set you can develop. If you can get in the habit of getting out when you're wrong. And the second one, which ironically is close to that, is learning to be patient when you're right. Because a lot of times you're at the top of something, but there's an amount of volatility and people get stopped out in that volatility. And by stopped out, I mean that you put a stop in it and you said, well, I'm going to sell it at the even number, but if it goes a nickel past it, I'm out. But the volatility in those candles oftentimes go 10 or 15 cents. You need to give it 17 cents, not 5. So if you're trading and you're going to give a 17 cents pain, you need to be doing what? Looking probably for 34 cents or 40 cents, or maybe 3 times that amount is the target for most of us. We want to see, you know, at least 2 times, but preferably 3 or 4 times. So I want to see at least 34-cent potential or target, and maybe 50 or 60 cents, right? So getting in the habit of picking the right direction, limiting your losses, especially compared to your target. But then the second part of that, and you build both of these in level 1, is learning how to be patient for that target. When it's going like this for 5 or 8 minutes, make it prove you wrong. Let it hit your target. As long as it's staying inside that, make it prove you wrong. And we talk about strategies on a regular basis of what we call time series stacking. So a lot of times it looks really bad on a 5-minute chart, but when you go to a 15-minute chart, you realize all this craziness you're seeing is still inside of the last 15-minute bar. And by doing that, by going from time frame to time frame, it helps you to kind of mute out all of that noise, to just slow it down and take a step back and look at it from a little bit bigger picture. We will talk more about those in other videos, but right now we want to focus on picking the right trade at the right time and the right stock. Your goal is to have 5 out of 7 days trading that are profitable, 5 out of 7 that are profitable. So a profitable day is defined as a gross profit of greater than $30 per trade, right? So if you have 5 trades, that's $150. So we want to see, if you have 2 days where you lose money and you lost, say, $50 on those, you may have made $150, $150, $150, $450, and then you lost 50 on each of the other days, you may have only made $350. That's fine. That qualifies. There are a couple of rules or restrictions that we have in here. We do want you to have enough trades that you're building experience. So having 1 trade on Monday and a trade on Thursday and then a trade the next Tuesday, that's not 5 days. You need to have enough trades each day to justify that you're creating, through the experience of the trade, that you're creating consistency. So a profitable day is greater than $30 per trade, with a minimum of 5 trades or 1,000 total shares traded for any single day. So I think we've hit on that enough. That's all it takes. Once you've done that, you're now called a level 2 trader. So you are the level you're at that you're trying to break through, right? So if you're a level 1 trader, you're trying to get through level 1. If you're a level 2 trader, you're trying to get through level 2. Some of the things are fairly simple to read and to recognize. Level 1, you trade 100 share lots. Level 2, you trade 200 share lots. Minimum number of trades is 2,000, right? So it's the same number of trades as 5 round turns, but 200 in, 200 out times 5 is 2,000. Now the difference is where you're trying to get $100 a day. If you doubled it, normally you'd say, I'm trying to get to $200 a day. But part of what you're trying to do in level 2 is to increase your margin of profitability. You're trying to increase the amount of money you make on average per trade as compared to the amount that you lose on a losing trade. So your average gross profit per day, we want it to be $250. So if you had 5 out of 7 winning days and you did 250 a day, that's $1,250. And then you lost $200 a day on the other 400, you're up $850. So let's just talk about the basic. If you are a level 2 trader, you trade 200 share lots, you're trying to do more than $30 per trade with a minimum of 2,000 shares traded. So you still have the same minimum to count as a profitable trade. But rather than trying to make each trade a bigger winner, you're going to have some that are bigger and some that are smaller. So the gross profit doesn't need to be necessarily higher, but we still want to see 5 round turn trades per day. And you want to have a minimum profit target of 150 per day, right? A minimum profit target of 150. Well, what's the difference? So that's 5 trades at $30, right? That's your minimum. So what if you made $100 during the day? Well, what we would normally say is that doesn't count as a profitable day. It doesn't count as one of your 5 of 7, right? If you did under 150. So if you did 150, then it does qualify. If you did 140, it wouldn't qualify as a winning day. It doesn't count as a losing day. It's just not 5 out of 7 over 150. If you're trying to get more than 150, but your target is 250, right? So you're trying to get to $250 a day, average gross profit. So that's before commissions and what have you. That's gross profit. You want to see a minimum of 150 for it to count. So if you have a day where you're 250, and you have 3 days of 100, you don't qualify, right? You may have 7 winning days in a row, but if a couple of them were under $150 a day, it doesn't qualify. So a level 2 trader, you're trying to do at least 5 trades, 5 out of 7 days in a row, where you're doing at least $150 a day in profit, with a target where 5 out of 7 of those you really want to, you're pushing to get 250. So if you meet the minimum, right, you do $150 a day. That's $750 over 5 days. And the other 2 days you lose 100. That's 200 loss. You're at $550. That's $2,200 a month. And if you take commissions out, you're around $2,000, $24,000 a month. So that's kind of the bare minimum. But what you really want to see to move to level 3 is $250, 5 out of 7 days. That's $1,250. If the other 2 days you lose 200, that's 400. Now you're at 800 again, right? So that's, if you're doing that 5 out of 7 days and you have 20 trading days, you're around $2,400, which is for 12 months, which is almost $28,500 to $30,000. That's level 2. That's level 2. When you get to where your average gross is higher than that, you can actually move. You'll see people that are level 2 that actually have winning days that are $500, and then 150, then 250, then 400, then 800. And so you'll see it's sporadic. People aren't typically going to 250 and then stop. If you're doing well, keep on going. So when I see people that get to 265 and they quit, if you quit because you're tired, or you quit because you don't see opportunity, that's fine. But again, don't trade your P&L. If you're doing well with your trading, keep on trading. If the market is doing well, then keep on trading. If the market all of a sudden slows down and you're at or near your target, quit trading. What if you're at $240? You made the 150, but you didn't really hit the 250 target you're trying to hit. Quit trading, right? Because what if you lose 80 bucks? Now you're, now you're down. If you lose $100, now you're below your minimum for the day. And so the rules that follow from here are important to recognize. One is that you're really trying to do 250 a day. And one of the things that I don't see included here that I'll make sure is added is that actually it's in the rules on the bottom. So we'll cover it there about how many days of loss that you can have before you go back. So level 3, so we go from 100 shares to 200 shares, now to 500. So you're jumping up to 500. And a level 3 trader, one of the interesting things that you're doing about it, and let me take a quick step back. On level 2, you can buy 100 shares and then bid for another 100 shares lower and add to 200. So you don't always have to trade 200. You can trade 100, 100, 100, and things that are very volatile go down in size. Things that you have a strong move pending, buy 200 or buy one and then bid for another level if you think it may hit both, and you bid for one. If it rips, you only got in 100, that's fine. If it goes through it, you got a second 100, you averaged in. But by knowing where your stops are and where the levels of support are and where the levels of resistance are, you can start taking that 200 shares and improving your average price when you bought. You can also sell at the first target and then hold some and put a trailing stop on to go for the next target, which may be a good deal more. And you'll see your profitability building going in and out of it. You'll also see where you sell 100 and it comes back and you buy 100 again. Now you have 200 and it goes back up a little higher at the same level and you sell both of them. It looks like it's going to stop and you go 200, 100, 200, 100, and you keep adding in. Well, what we're going to do at the end of the day when that happens is we're going to divide that by 200 share trades. Right. So if you bought 100, sold 100, bought 100, sold 100, that's one trade. And whatever the average of those two will add into it. So don't have to worry about being less than 200. You can use that now to your advantage to trade smaller when things are more volatile or a little more risky, to trade a little larger when things are moving more stable, or you have multiple targets and you want to have a bigger position and you sell some out and then the rest may get stopped out. or it may hit a higher target. But you'll get in the habit of holding trades for longer periods and staying in trades for longer times, and that'll make you more comfortable with trading longer periods. At level 3, we're at 500 shares, and we're looking for a daily total of 5,000. That's literally the same number of trades per day. So you're not increasing really the number of trades that you're doing, and you're really not increasing you're not increasing the profitability in level 3 versus level 2, because you're going from 200. You're going from 200 shares to make 250 to now 500 shares to make 500. It's actually a little bit lower. So we're trying to stretch out at level 2 to get in the habit of buying 100 and another 100, selling some and selling more, and get in the habit of making more money per trade, stretching out our winners and cutting out our losers, and on our more risky trades, trading smaller so that our net loss is smaller, right? Those are things we pick up in level 2, which is why level 2 is incredibly, incredibly important, probably the most important level that you can get through. Excuse me. At level 3, we're now going to make money. Level 3 is the place where we're going from trading efficiently and trading effectively. So picking the right trades and the right stocks at the right times, and then learning how to surf that wave, learning when to buy in, when to cut it out, when to buy it back, when to cut it out, when to stay in it and hold it for that final move that really goes. And that's where software like Flow and other things really help you stretch out your profitability. At level 3, we're actually this is where the transition from being a trading for fun and seeking profitability. At level 3 is the place where our goal is consistency. So the other goals before, we're trying to be effective in finding the right stock in level 1. In level 2, we're trying to be efficient about when we get in and when we get out, and holding things longer, making each trade count more and build more profitability, getting out of our trades quicker, adding in when we're in a winning trade to build a better buy position, right? So we went from effective choice to efficient trading. Level 3, we're going to make an income, right? So at level 3, we're looking to trade, when you're talking about an average gross of $500 per day, I want to see consistent income. So when we're building consistency from effective to efficient to consistent, now I want to see more days. So instead of just 5 out of 7, 5 out of 7, I want to see 7 out of 9. So it's a longer period. And this is why I say a lot of people some people never leave level 3 because they don't want to leave level 3. Some people just have trouble getting there, or their 1 out of 9 is a bad day and it goes past their average. So one of the rules that we have on there is that you can't have a losing day bigger than your best winning day. So if you had a $1,000 day and you went, wow, this is awesome, and you got crazy the next day and lost 1,100, you now screwed it up. You got to start over the whole 7 out of 9, right? And so part of that is to learn not to give back what you've earned. Take money that you put some of it in this pocket and go back into the market. Take some of it, put it in this pocket and go back into the market. So our goal here is not an increase necessarily number of trades, but it's to be consistent over more time. So level 3 trader is trading a maximum of 500 shares. That means you can bid for 500, offer 500 out, but you can also bid for 200 and 200 and 100. You can bid for 300 and then add 200, whatever the case may be. It depends on how confident you are, where the time series seem to be suggesting things are going. But a level 3 profitable day is $500 per day. And more than half of your trades should add up to 500. So you don't want to have 3 trades of 500 and then 100, 200, 100, 200, and you bought, sold, bought, sold, bought, sold. If you're still doing that, it means you're not confident at 500 yet, which is fine. Stay in that for months, 6 months, 3 months, 6 months, a year. I don't care. But stay to the point where half of your trades, you're buying 500, selling 500, buying 500, selling 500. You're going to find that some of the time you're going to get into scalping, and your profitability per trade, if you keep track of that, and we have a tracker that we've offered for folks, if you keep track of that, you're going to find sometimes that your actual profitability per share goes down when you first start level 3, because you're kind of scared when you're handling twice as much volume. And where before, if the trade goes against you, it would go, you're $100 down or $200, and you go, oh my gosh, I'm close to my daily limit. And now at 500, it's 50 cents against you, down $250. And so it can be a little bit daunting at that level. And so you'll find yourself getting in and getting out. So you trade smaller. That's fine. In fact, it may be that you start off your day trading 200 shares, 200 in, 200 out, 200 in, 200 out, and build up a little cushion of $200, and then go to 300 shares, then go to 500. But at the end of the day, to be able to qualify to go to the next level, doesn't mean do this all the time. It just means to qualify to get out of level 3. You want to get to the point where you're comfortable enough that half of your transactions are 500 shares or larger. And it could be that you bought 300, you bought 200, and then you sold 500. That's fine. You bought 200, bought 200, bought 100. That's fine. But when you sell it out, you got 500 in, 500 out, 500 in, 500 out. You got to get to that point where at least half of your trades are 500 shares. And so that's the core of level 3. Now, one of the things I want to impress upon you is that the average gross is $500 per day, 7 out of 9 days. Well, if you have, let's just say 20 days in a month, times $500 is $10,000. That's 120 grand a year, right? If you're only doing that, 60% of that, say 20% of your days you lose money, and that takes off the other 20%. So 60% of that, you're still $72,000, $75,000 a year. You're at a point where that's an income, right? That replaces many people's incomes. Some people say, look, I need to make $2,500 a month. We have folks that trade internationally said, look, if I can make $500 a month, I could, that I'm in the top 1% in income. We have people in places that say, look, I need to make 10 grand a month to replace my income. Whatever it is, all of those can be achieved in level 3. You don't need to get to level 4. So part of the reason we want 7 out of 9 days, part of the reason we want an average gross profit of $500 is for you to be pulled to level 4. You're not trying to just rush through level 3. People try to rush through level 1 so they can get to level 2. And then level 2 is a little daunting. People get, every once in a while, you're going to have people that are going to bust through that $1,000 mark on level 2, making $1,000 in a day. You're certainly going to bust through that $1,000 in a week. But at level 3, you can literally have $10,000 days at level 3, right? Days, not months, not even weeks. You can literally have $10,000 days. You can certainly have $1,000 days, $2,000 days. You can make 100, 200, 300. I have had guys in my office doing 300 to 550, 600,000 and still being in level 3. And they were trading their rear ends off. They're not doing 5 trades a day. They're doing 20 trades a day, but still. The point of it is you don't necessarily have to get big to make more money. If you get where you're consistent scalping in and out or swing trading, whatever it is, you can make really good money staying at level 3. Level 4 is what we would call a pro trader. A level 4 trader has completed the paradigm trading plan, which is all of the other things that go alongside of this and what we now call the pathway to prosperity. And so the plan is the plan of your work, how you do the fundamental analysis, how you do technical analysis, and then how you trade during the day and how you manage afterwards. But the pathway to prosperity includes all of that, plus a good bit more, plus kind of mastering the tools in flow, learning how to use other techniques, but having 3 to 5 core trading strategies at your beck and call, that you're proficient with them. Not that you know how to shoot the gun, but you know how to hit the target, that kind of thing. And at level 4, a trader should be regularly averaging 7 of 10 days. So even if you're not 7 of 9, you should be 7 of 10. And you should be averaging more than $500, not per share. You should be averaging $500 per day profitability across the 10 days. So that means $5,000 every 10 days. So on a 20-day trading month, you should be doing $10,000. So at level 4, you kind of need, you should be at $10,000 a month consistently to be level 4. So every 10,000 shares or better per day. You're doing this on a regular, every once in a while, you're going to have a bad day. There are a bunch of rules that we're going to talk about in the paradigm trading system that would kind of adjust some of this. If you feel sick, we've had so many people that have had Omicron or had whatever. And I think I shared with folks on one of the videos before, I had 2 or 3 bad days in a row and I started feeling sick. And that's when I started having bad days. And I was taking bigger losses. I was holding things longer. And I realized my head is, I'm at 90%. If you're not at 100%, you don't need to be trading. If you're at 95, you need to be trading smaller, go back a level. If you're a level 3 trader, trade like you're level 2 or trade like you're level 1 just to stay in it if you want, but feel no obligation to trade if you feel sick, right? You need to be prepared for that, but you should be consistently 7 out of 10 days. So that means that out of a month, out of 20 trading days, you shouldn't have more than 6 losing days. Okay. Not more than 6 losing days. So this is easy to assess. You go and look at January, you go look at February, and at the end of the month, you go, how many losing days did I have? If you have more than that number of days, guess what? You go back a level. You go back a level, you prove yourself. It's kind of like lifting weights. Once you build up a certain amount of strength and then you quit for a little while, you can't go back and bench 300 pounds because you did it in college when you haven't benched for years. You need to go back and start lower, build it back up, prove that you can do it, retrain that muscle, same thing. You've had that number of losing days, something slipping a little, may have been because you were sick. Oh, it's not because I'm a bad trader, it's because I'm sick. It doesn't matter. That happens. For me, if I have a few bad days, I cut back in size dramatically. I'll go back a level or 2 and build back up just until I know that my body and my mind are together and they're working the way that they're supposed to work. So in the, let me sound away. So in the paradigm trading system, you don't want to trade on days where you're not prepared. If you don't have time for 30 minutes after the market to read about what happened during the market, what you were seeing, to go back and analyze it, what's expected perhaps to happen for the next day, I would recommend that you use the phase technology that we have, FAZE, that you go to that technology and you go look for some of the biggest movers as well as, and we have it short-term, medium-term, long-term, go look at some of the medium-term things and see what's expected to really gap or move over the next few days and write those notes. These are, I call it a watch list. Here are the stocks that I want to watch. Here's the futures that I want to watch tomorrow. So when I come in pre-market, I'm paying attention to those. This is a really key one. Number 2 is any loss that exceeds the daily loss limit is to be deducted from the following day's loss limit. So this is applicable at every level. So if your target is $250 and your loss limit is the same, most of the time, if it's 250, your loss limit's 150 and you lose 200, then you deduct $50 from your loss limit the next day. So if your loss limit was 150, now it's 100, right? If your limit is $250 and your loss goes to 350, in the example here, your loss limit for the following day is 150. Most of the time, people are keeping their loss limit at the same as their target, and they're just trying to keep 5 out of 7. So they keep them the same. It makes it easy to remember. Once you get into level 3, you don't want your loss limit being the same as your target. So you may have target days of $2,000 or $4,000 in a day, but you don't want to necessarily let your loss get to $4,000 in a day. So if your target, I would say people that are trading, say $2,000 daily targets, the loss limit should probably be 1,000 or 1,200, right? It's a portion of that, but not the same amount. And I'd like to see where even if I have 2 bad days in a row, I didn't kill more than one of my winning days. So if my target's 2,500 a day and I lose 1,000 one day and 1,000, I can make it up with one day where I hit my target or better. So deducting that is really important. So that forces you to get smaller, to be more specific. It forces you to be more effective in your choice of what to trade and more efficient about when to trade, when to get in and when to get out. 2 days in a row where the loss limit is exceeded results in a day of no trading. Well, wait, what if you were 7 out of 9? If you had 7 winning days in a row, can you just not trade the next 2 days? Nope. It's 7 out of 9 days with those minimum trading expectations. So what if I went in one day and I lost, my limit? And then I went in, or I lost $100 more in my limit. And then I went in the next day and I went through my limit again. Well, you didn't qualify for 7 out of 9, right? And it doesn't mean, again, it happens all the time. It'll happen to people for months and months and months. So it's nothing. It doesn't mean you're a bad trader. It just means that you're still working on consistency. That's the reason we have at level 3, 7 out of 10 instead of 7 out of 9. It's the reason we go 5 out of 7 days. It's about building that consistency. And people get frustrated when they have 4 out of 7, 5 out of 7, but they didn't meet or they went too big on the loss. That's fine. That's why we do it, so that you can get better. And once you've gone through those levels, you'll feel so much more confident that you went through them properly, and you're ready to go to the next one. Now, should losses exceed 4 times the daily loss limit? So say your loss limit is $250. And for whatever reason, whether it's in one day, or which should never happen, or you lost the max, and then you lost double, or whatever it is, and you had 4 times where you lost it in a 5-day period, you need to go back a level. Well, what if my loss limit's $100 a day? My target's $100 a day because I'm at level 1. What if I hit that limit every day? Well, then you need to go back and do some analysis, maybe even trade smaller. Most likely, if you have 4 losing days in a row where you hit your losses, and it may be that your loss limit was 100 and you lost 100, you lost 150. And so your next day was 50 and you lost 75. So the next day you had to take 25 extra off the next day of 100 and out 75 and you lost 90. That happens. So you get into kind of this bad position where your loss limit is so small, it doesn't give you much room to trade. Well, what that means is you need to pick something different to trade. So the message or the lesson from number 4 here is that if you have 4 times the daily loss limit during any 5-day period, find something else to trade. Find a futures contract or a stock that trades a little bit slower or has fewer moves, or maybe is a lower price stock, but you're still going to stay at level 1. I would recommend you take a day off, do your research, find out which stocks or futures that would be better suited for you, and then you go back into the game again. And if you'll do this on a regular basis, you can do that time and time and time again. And when you start having a few winning days, it makes up for the losing days. You can trade for a long time. And even if it takes you a year to get it, you'll start picking it up. So number 5 is the number of trades may be modified for those trading options or futures to reflect no fewer than 3 trades. If you're going to get consistent across these timeframes, 5 out of 7 days, 7 out of 10, you need to do at least 3 transactions a day. Are there going to be days where you only do 2? Yes, that's fine. Don't force yourself to make a 3rd trade. It just means that if you didn't work for 3 days and you didn't get the trade on the 3rd day, then you just start over on that 5 out of 7 days. That's the reason we do it, right? Part of it is being able to find effective trades, trading them efficiently. If you can't find 3 trades to make in a day, then that's an area you got to work on. You've got to work to find out where are the opportunities. Go back at the end of the day and say, where could I have made 7 trades? Well, if I could have made 7, then probably I can pick up on 3 of them tomorrow. And then you'll find 3 or 4 the next day. But that's part of it. But if you don't make those number of trades, and it may be that you say, well, I'm really a swing trader. I only trade for an hour or 2 in the morning and I hold things for 3 or 4 days. Well, then just take days and make it weeks. Make it 5 out of 7 weeks, 7 out of 9 weeks, 7 out of 10 weeks. Just increase the time frame to allow you to have that. And then you check everything on a monthly basis or every 4 to 6 weeks and see how you're doing week over week. And what your drawdowns are. Make notes in your notebook if you happen to be drawn down. If you draw down 1,000 and you make 100, you draw down 1,000, you make 100. Those may be winning trades, but if you're taking a huge amount of pain to make small things, it means one is that you're taking too much pain and you're scared of winning. You're not holding your winners long enough, right? So there's two errors in that. And those are things that we can see through analysis and on some of the tracking sheets that we have, you'll see those numbers, what your average win to loss ratio is, and so on and so forth. And as we walk through those, that'll help you to improve those. So if you're trading futures and you're trading 3 times per week, you need to allow 5 out of 7 weeks of this kind, this level of proficiency and consistency to go to the next level. Hopefully that makes sense. So that's kind of the basics of the Trade Oracle pathway to pro, or what we used to call the paradigm trading system. So I hope that that added some value. I hope that it brings up some, it gives you some confidence to know where you are, and the confidence in the plan, the simple plan to move ahead. If you want to make it really simple, you can adjust. There are things in here that you can adjust a little bit, but let's just make it really simple. If you're oops, what in the world did I just do? If you are at level 1, and I don't know how I did that. Undo, rotate, right. If you are at level 1, you're trading 100 share lots, you're trying to make $100 a day, 5 out of 7 days, right? If your target loss, your max loss should be $100 or less, right? You don't want to have losing days where you lose 150 and your winning days you make 100. We're not building the level of efficiency that we want, right? So if we're trying to work on effectiveness and efficiency, both at level 1, really effective trading, our trades are not that effective if our winning trades are 100 and our losing trades are 150. So level 1, keep it real simple. It's all about hundreds, 100 share lots, or it's 1 contract futures, 1 micro contract futures, 1 mini contract in the futures, single contracts, 5 trades a day, targeting $100 a day. You want 5 out of 7 profitable days. You do that, you're at level 2. If you go past $100 one day, say you had 5 out of winning days, and the next day you lose $120. Well, the next day your loss limit is 80. As long as you make those trades and you lose less than 80, you met your 5 out of 7. But you shouldn't trade your P&L, even your weekly P&L. You should trade whatever you can. So if you're down $50, it doesn't mean, well, quit. So I don't want to reach my $80. If they're good trades, make those trades. What would be more impressive is if you end up positive and you have 6 out of 7 instead of 5 out of 7, right? There are people that have 7 out of 7. So trade the trades, don't trade the P&L. Because the goal here is not to sneak into the next level. It's to build a level of efficiency that you're overqualified to be at the next level, right? You want to be pulled to the next level. You don't want to push to get into the next level. Level 2, keep it really simple. 200 share lots, you're increasing the average profit per day, because not only do you want to find the effective way of selecting the right stocks and the right things, you want to be efficient about building into the trades, building out of the trades, holding trades longer. And by being more efficient, you make more money per trade. So 200 share lots, 5 trades, 5 round trip trades, $250. Everything else is the same. 5 out of 7, $30 per average trade, da, da, da. And I would actually say that if you want, leave your maximum target, your maximum loss probably at $200. If you want to make it 250, that's fine, but you set it, and whatever you set it at, that's what it should be. Level 3, 500 shares, target of $500 instead of 5 out of 7, 5 out of 7. Now it's 7 out of 9. So we go 5 out of 7 on level 1, 5 out of 7 level 2. Level 3, we go 7 out of 9 days, and level 4, we go 7 out of 10 days, because we're trying to make sure that we're focused on what's important at that level. Level 3, we're trying to make more money. We're trying to take up our income per day. So $500, 500 shares. I would have my loss max at 500. You may want to make it 400, but I would make it no more than, it can't be more than 500. It can't be more than what your target is for your winning day. No winning day, no losing day can be bigger than a winning day. So say you made 500, 600, 700, 500, 800, 900, 400, 300, whatever it is. You had all those winning days in a row and then you lost 1,000. You just messed up the thing, and you got to go back a level, or you got to start over at that level 3, right? So especially if you went double your loss, right? You just lost everything for that day. You hit your target for the next day, loss limit, then you should really go back to level 2 and work your way back up. So it's about building that efficiency and that consistency. Level 4, really you're at a pro trader. The biggest problem that we have with people at level 4 is they're at level 4. They're a pro trader. They think they have no rules. There's no regulations. There's no guidelines. You're only $500 per share with the same kind of volume, and you're trying to get 7 out of 10 days of consistency. But really what you're going to end up trying to do at level 4 is this 500 is going to change to 1,000. you're going to make it $800, $700, $800, $1,000, $1,500, $2,000, $2,500, $5,000. You're going to start over 6 months. You're going to get to a place where you're trying to do, you'll probably be doing 2,000 or 4,000 or whatever the case may be. And you'll find that if you stick with this 7 of 10 days, this number will get larger. This 500 will go to 1,500, 2,000, 2,500. Once it clicks, you'll start getting good. But the key is not to have blowout days. Be consistent. Just come in and work the machine. And that's when you'll see those incomes going from 120,000 a year to 500,000 a year to 7 figures a year. And that can happen in a matter of 6 months. You can get on that path. So take your time going through level 1, level 2, level 3. It's kind of like, the analogy that I would make is it's like boot camp. If you go through and somehow they don't make you do all the push-ups, they don't make you do all the sit-ups, they don't make you run as far, whatever, you're always able to get out of running, doing the 15-mile march. You're able to get out of doing the afternoon sit-ups, whatever the case may be. Then all of a sudden you're thrown into a war zone and they give you a 50-millimeter gun that weighs 22 pounds to carry. You are going to be dead from walking, much less somebody shooting you. And you're not going to be consistent. You're not going to be good for the team. And you're certainly not going to be able to get accomplished what you need to get accomplished. So it's better to be over-prepared and to be highly competent at the level you're at, so that when you go to the next level, it's kind of interesting because I have this happen now. I've told you, even in the past month or so, I went from level 4 style trading. I dropped back into really like level 2 trading. I was trading 3 to 5 big contracts in futures, and I went back to trading 1s and 2s, building my way back up. But I go to the level that I'm comfortable with, but I may trade big contracts while other people say, hey, I'm still trading minis or micros or whatever the case may be. And then you'll go from trading 1 or 2 to 3 to 5 to trading big contracts. And then you have a bad day, you go back to trading minis. That's fine. Not only is that fine, that's the way it should be. That's absolutely the way it should be. And if you do that, then at the end of every month, certainly at the end of every quarter, you'll have profitability. And at the end of every year, you should see that annual income going up and up. So that's really the whole thing. And I know I've taken an hour to talk about something we probably could have talked about in 15 to 30 minutes. But I wanted to add in these little details because the psychology of how you integrate this into your trading is just as important as the math. To understand that this isn't something you're trying to rush through to get to the next level. It's basically saying when you do this level consistently, then you're ready to go to the next level. It's about building effective selection, efficient management, and consistency across all of those things. So anyway, thank you. Right now, I'm going to stop the recording, and then I'm going to go to pull this back up. And then we will go to question and answer.